Now we're going to hear from Andrew Sheng. Andrew's going to talk to us, I think, in a presentation that may echo some of the themes that Sergey started with, the sort of the emerging markets perspective on the world, and help us to understand how politics really matters from the perspective of, say, a China or an India.
Thank you very much, Christia.
And not 43 slides.
No, definitely not. Only 30. I really want to thank INET for this brilliant conference. 3 days working every night until 11 o'clock is fantastic. And that show this, of this picture of all the beautiful mountains and green and you parachuting down into this deep hole, well, I felt exactly like that. And as I was floating down, some guy went shooting past me, and I said, that's a representative rational agent who assumed he had a parachute. And anyway, by the time I landed, I saw this guru, and he said, are you an economist? I said, yes. I have something for you. I said, yes. So please lean forward. Yes. He said, it's the politics, stupid. And basically, that's the message of my talk today, that everything we need to understand is that the economics, as we all know, is flawed. The free market economics ignore the institutional side. But if you add the institutional side, it still lacks the environmental side. And basically, we are in both a environmental crisis as well as a financial crisis, and they have the same root, overconsumption financed by over-leverage. Now, how do we get out of this? This is not economics, this is total politics. The economics part of this is exactly what Elena Ostrom said, we're actually in collective action traps. But the collective action traps need to be thought about systemically because we are operating in collective action traps at the national level and worse still at a global level. And it is all interactive. And that issue clearly was originally, well, earlier on thought about by E.F. Schumacher, who wrote the book Small is Beautiful in 1975. And he basically said the real problem is that economics even then was fragmentary, thought in silos, and ignored man's dependence on the natural world. Now, coming from Asia, ancient Chinese philosophy believed, because from deep experience, that man and nature are one, right? Because they realized that man depended upon nature. Unfortunately, with science, we've ignored this and we think that we can go forever. So since Richard has talked about yin and yang, Schumacher, who spent his earlier years also in Burma, was the first to introduce Buddhist economics. And really, those of us who want to go towards a less materialistic economy would realize that you need to think about intellectual property rights, you know, as the digital, knowledge-based consumption. And Schumacher already thought about it. He said, Buddhist economics is different because it's not talking about materialism. It's about the multiplication, not of wants, but the purification of the human character. Now, the issue here was also thought about in the 1970s by Fritjof Capra, the Californian physicist who wrote the book called The Tao of Physics. And he really was one of the few to start thinking about qualitative growth for an economic, sound, ecological, sustainable, and socially just economy. Now, the problem is really this. This is the dynamics we've been talking all about. If 5 billion, mostly from the emerging markets, of the current 7 billion of the global population move from poverty to middle income consumption per capita, as like the advanced markets, the resource availability and ecology is unsustainable. And we all know about this. And so what is really happening, and this is the biggest thing that is happening in the world today, is that China and India are trying to move to a new growth model through their 12 five-year plans. Those people who have not understood this would not understand that this is the biggest thing that is happening. Because if they succeed, our chance to deal with the ecology is possible, not definite, but if they fail, we were going to have global failure. So how should we think about this? You know, we all know the problem, but we need to think about the solution. And we need to think about the A, B, C, D of the development. And the first is about architecture. And secondly is B for business models, and C is for context, and D is for development policy. Now, the architecture, as the political scientist Anthony Downs pointed out, that producers are concentrated and consumers and the people are diffuse. And that's the inequality problem. Because if the markets are networks, as this my favorite chart of McKinsey shows, you know, everything is concentrated in two hubs, London and New York, and everybody else are linked to that. That increasing winner-take-all concentration creates this huge inequality. Now, how is this inequality occurs? Well, I learned from John Kay that market is a self-organized, incentive-compatible system in which people exchange goods and services, mostly in monetary terms. And we now know, of course, that free markets are fragile. But the state, we always think as, well, we want policy. A lot of the advice here today, policy, policy, policy. But why isn't policy implemented? Why is outcomes very different from policy intentions? The reason is that the state is actually also a market, but it is a market for power. And why did I come across this? Because if you really look at China, look at India, you're talking about different layers of government. Markets, networks are hierarchical. And it's about allocation of resources and power, and the bureaucracy is trading this power all the time. And so if you don't understand how that bureaucracy works, you don't understand the economics of the macro, which is at the top, the micro is at the bottom, and we just learned that what's in the middle? The answer, the politics of bureaucracy and the state. And so once you begin to understand that, you need to understand systems go through centrifugal concentration and diffusion features. And that is pretty important, because ultimately, what we really need to understand, what people care about is people, planet, and profits. And right in between, whether we get there, sustainability is governance, and governance is politics. So, you know, we really have ended up with this huge inconsistency of governance. Market failure is when there's inconsistency in incentives and compatibility. So we push the problems to politics. And when politics can't agree also, there is this inconsistency that's happening. And the real trouble is that the bureaucracy is not necessarily serving neither the people nor necessarily the politicians. I mean, there are huge disagreements in this issue. So what about business models? Now, Eric Beinhocker, I'm being very, very eclectic. I'm trying to think through all, you know, what he suggested. It talks about, you know, evolution, growth is about physical technology, social technology, and business design, which is business plans. Now, all this is about a co-evolution. So systemic statecraft really needs to understand that it's not about policy to achieve objectives. You need to understand that business is always gaming. And policymakers who think that the market is not gaming them, you know, need their head examined. So, you know, if you really look at what's happening, and this is from Ed Turner, that the whole thing is about bubbles and cycles. Now, what are these bubbles and cycles? It comes down to a very fundamental issue. The issue basically is that, is finance an engine of growth or is an engine of a bubble? Now, the engine of a bubble is very straightforward. It is exactly about inequality. If the interest rate is below the real growth rate, the more I borrow at negative real interest rate and pump into economies that have real growth rate, the more I make money. It's basically arbitrage, right? But the more I take the assets off the table, the more it is for those people who have access to finance, and the poor who doesn't have the access to finance has both the loss through financial repression and loss through predatory asset collection amongst those who have that access. So that's the real political economy of the financialization issue, which includes that asset bubble as also in the property market. So what's the context? Very quickly. The power is beginning to shift to the east. But the ADB forecast by 2050, Asia will account for 50% of world GDP and 50% of world financial assets. By that time, Asian middle class will account for 60% of global consumption, but also more than 50%, 60% of global pollution. And that clearly is unsustainable. Now, if that is unsustainable, what is happening? What is happening is that market business models go into state policies, go into the resource conflict, and you have a huge conflict, which is exactly the collective action trap that we are in. So what is the sustainable relations that we should try to aim for? If we look at all the failure of negotiations in Doha, Cancun, Kyoto, etc., you realize that the whole world is in national collective action trap and global collective action traps. So what we do need is competition. Now, we have all talked about negative feedback mechanism, positive feedback mechanism, which George calls reflexivity. But what we really need is a race to the top, not to the race to the bottom, which is an arms race or a burn race, but a race to the top to a green, sustainable, socially inclusive economy. And that comes down to the policy aspects. The science tells us we've already got all the science that we have. It's not necessarily accurate, but we know we might be able to get there. How do we deal with this? If you listen to Dana Meadows, who was one of the architects of, or one of the contributors to the Limits to Growth, you really need to understand it is about traps. And if you need to get out of the traps, and Eleanor Ostrom also realizes from history that we can get out of these traps if we cooperate. And there are various successful design principles, which I will not go into here because you can always read them. But we need to find the leverage points. And politics is about trying to find the leverage points of shared values, about community, that we all live in one earth. We need to cultivate networks, exactly what INET is doing. We need to work at multiple levels. Democracy is not about just the elite controlling or influencing the masses. It is about all levels, up, down, top down, bottom up, outside in, etc. We need to make space for self-organization. We need diversity. We need to get the incentives right. And so I want to make a very simple point. Why is the financial system not serving the real sector? I did a very simple study. Why is trade finance still going down despite this massive credit? Very simple. What was the ROE on lending to trade finance? 5%. What was the ROE on proprietary trading on FX or in equities? 25% plus. Guess where we're going? We're going to create even more bubbles. So, we really need to pay attention to what is important, not what is quantifiable. We need to make feedback policies for feedback systems, and that's exactly the issues that we haven't concentrated on. We need to prepare to make sacrifices for the basic greater good. The reason why we got into trouble today is that the leaders of the finance industry are also free riders. And that is a serious problem. When the leader itself is, and nobody is contributing to the public good, that's when the system implodes. So we also need to understand that change takes time, and we need to prepare to be surprised. So basically, the greatest challenge for Asia really is to rediscover how we can live in a sustainable world, giving rising population and limits to natural resources. Since mainstream or neoclassical economics has failed to deal with these contradictions, we must re-examine within ourselves. Don't blame others. Change begins with us. How can the world become a better place with limitless wants to unlimited self-destruction? That is truly a challenge for Asia and global thinkers. And I hope we're not going to commit harakiri after this. Thank you very much indeed.